Break even is the point where revenue equals cost. Once you cross that point, every additional sale contributes directly to growing your profit and building long-term financial success. Now, when does revenue equals cost? Pay attention here. Say, how many products must you sell before you start making real profits? Today, in this video, I'm going to be unveiling one of the most powerful business mathematics concepts: break-even analysis. This is the point where revenue equals total cost. At break-even, you have not made a profit and you have not made a loss. You have simply recovered all your expenses. Every successful business owner, entrepreneur, or investor understands this number because it tells them exactly how much they must have sold before they start earning money. Stay glued to this video because I am going to be breaking this analysis down in 3 simple steps. Step 1. Understanding the key terms. Revenue is equal to selling price times the quantity sold. Revenue is the total money coming into your business from sales. Now, let's take one real life practical mathematics example. If you sell 100 products at $10 each, to calculate the revenue, you say revenue is equal to $10 times the 100 products, meaning revenue is equal to $1,000. While still under this step 1, another key term to be considered is cost. There are 2 types of cost. You have fixed cost and variable cost. Fixed cost stay the same regardless of production. Examples are rent, internet subscription, salaries, equipment. Fixed costs are constant, like the monthly rent, say $500. But variable costs increase as production increases. Types of variable costs are your raw materials, cost for packaging, cost for shipping. Your variable cost is equal to cost per unit times quantity. This will take us to our step 2 in the breakdown. For calculating your break-even, here is the formula called the break-even formula. In this formula, the break-even unit is equal to fixed or final cost all over the selling price per unit minus variable cost per unit. This formula tells us exactly how many products must be sold before profit begins. Now, let's have a practical real-life mathematical Example, the coffee mug business. You sell a customized coffee mug, given that selling price is equal to $10. Cost of production is equal to $6 per unit. Monthly fixed cost is equal to $400. Here is now the big question. How many mugs must be sold to get a break even? First of all, let's find contribution per unit. Contribution per unit is equal to selling price minus variable costs, which is equal to $10 minus $6, which is equal to $4. Now, every mug sold contributes $4 towards paying fixed expenses. Secondly, applying break-even formula equals 100 units. So you must sell 100 mugs before making any profit. Here now comes verification. This implies that every mug sold contributes $4 towards paying fixed expenses. Applying break-even formula. Here is step-by-step substitution, which is putting in the figures and carrying out the maths step-by-step demonstration. You see in this demonstration on your screen that you must sell 100 mugs before making any profit. Now come to verification. Revenue at 100 units. Revenue here is equal to 100 times your $10, which is equal to $1,000. Total cost is equal to production cost, which is equal to 100 times $6, giving you $600. Add fixed cost, which is $600 plus $400, and you get $1,000. Revenue here, which is equal to cost, implies now $1,000. Therefore, you have your break-even at this point, whereas your profit is equal to 0. With this, we move to step 3. Step 3 is what happens after break-even. Suppose you sell 150 mugs. Revenue will be equal to 150 times $10, which is equal to $1,500. Total cost being 150 times $6, which is equal to $400. Therefore, $900 plus $400 equal to $1,300. Profit equal to revenue minus cost, which is equal to $1,500 minus $1,300, which is equal to $200. Therefore, profit now is equal to $200. Financial lessons here is, for example, you are starting a t-shirt brand business. Say selling price is pegged at $25, whereas your products or your production costs is equal to $10 each. Having your fixed cost to be equal to $1,500. Now, contributions per shirt will be equal to $25 minus $10, which is equal to $15. Break even units equal to $1,500 over $15, which is equal to 100 shirts, giving you 100 shirts. So you must sell 100 shirts before making any profits. Now, what if you sell 200 shirts? Let's look at this now. The revenue here will be equal to 200 times $25, which is equal to $5,000. Total cost then will be equal to 200 times $10, which is equal to